So I'm giving it about 5 minutes or 5 to 10 minutes, then we can start. I'm waiting for about 5 more people to join and then I can start. So just hang on a bit. So I just guess I'll start because of time. Hope you guys are all doing well. So all I'll be doing today is just doing a weekly review. This is something I personally do on Fridays and Saturdays, trying to look through if my week was successful or if my week was not successful, and where I think I would be able to improve. That's usually mostly in the coming weeks. So I hope you guys will learn a few things as to how I think about my trading and how I always use this to improve my trading week in, week out. So the trades that I started the week off with gold buys. I'll just write all the trades that I took this week. USD buys. Then the second one was USD CAD sells. Third one was GBP JPY sells. Fourth one was gold buys again. Then yesterday I took gold sells and gold buys. Let me change this to XAU. USD. Now the way I'll break this down is I'll go over all the gold trades at once. Then I go through my overall bias of next week. Then I'll do USD CAD. Then I'll finish off with GBP JPY. Actually, there is one more trade I took. There was GBP AUD sells. Yeah, so we'll start off with gold, the whole breakdown of gold. So coming into the new week, we had a few things marked up. I personally had a few things marked up for the week, and I had spoken this with a friend that I usually help in trading. So the first things first, going into the daily, this is where price was towards on Monday. As you can see, Monday was the week started off on 17th. So on 17th we had price at this level, this point in time, around here. So what we saw last week was this push down. We saw the previous week had given us a good bullish rally. Then the next week, which was last week, gave us this drop. Now, coming into, how I was looking at the price was, we saw a formation of a demand zone, which after that formed a break of this structure. Then we saw a continued push away. And then we saw exhaustion around the 2060 level. After which price on gold was overbought in layman's terms. And so what we saw was, after months of a bullish structure, we saw a strong drop. And this gold sales I caught this gold sales, and the breakdown is on my Instagram. So if you missed out, you can check it out. Now, going into the new week now, the thing that we would mostly be looking for was continuation of sales. However, with such a strong drop, the anticipation is price never moves in one direction. Price rarely moves in one direction. And especially in terms of when you see huge drops, price will more than likely have to give a strong retracement at the same time. because as you can see, price is not pushing away as strongly as seen by the size of the candles in this point. The candles were fairly small, as you can see, and therefore you can see even the retracement itself was not as big. Then we continued seeing a sluggish push. We saw a strong push towards the break of the 2000 mark, and then continuation with smaller candles. Now, NFP was able to give us premium price for us to see this drop here, and the sales were caught at this point with break of structure on the 4 hour there. And once these sales broke this level, which I had marked out, price really needed to, and exhausted around this point, price needed to push back up. And even though not retest this level, it had to push up in some sort of way. So my earlier views on gold was if we see a break of, if we see a close below this level, then this will be continuation, this would be ideal for us to take sales towards the downside. However, since we did not see a candle close below with this, the only other place that price would actually go to is up. And this is evident with the levels that we were seeing around this area here, because you can see this price point that price rejected from is the same price level that price rejected at with this level before breaking. So if price would break this level, fail to hold this level, then this is the level that we will retest at this point. And that's what we saw. So the buys were caught around this area. And just as an overview, let me take it back to now going over the trade itself. We go to gold, 4 hour. 4 hour. So this is the point at which the buys were taken. The buys were taken. For the intricacies of the trade, you just have to check the Instagram for the exact entries. I won't go into that, but the buys were caught around this area with a fairly small stop. But the whole idea behind this was, as I was telling you guys, let me close this out. So price has, this is the level that we're anticipating price to give continuation from. And at this point, when it broke this zone, it ended up forming a zone at this point. Now, the whole idea of supply and demand would be anticipating a drop and rejection of this point for continuation. However, what we saw is when price rejected this zone, we did not see a candle close below. What we did see was candle close above, hence showing the break. And then now we were anticipating now the retest to see if this candle here ended up closing below, this will be an indication that this was a fake out and that we would see price continuing downwards. However, we did not see that. So the only other place price was going is up. Now, this is where your timing actually comes to play, because if you were taking this on the 4 hour, you'd still have your buys at this point, TP to fill the range. However, for me, I went the safer route and actually went to look at the trade on the 1 hour. And so, I mean, I actually took an impulse entry on the 5 minute. So, what was that trade? Let me clear these things. Seventeenth. Sorry about this. So this is the point that I took the buys. We zoom in. At this point here, what you can see is price formed this minor level here. And in the process of retracing back to this zone, we saw price form this level here. So the way price pushed up with this forming this kind of structure was price dropped, but in the process of coming back, gave us this retracement here, after which price progressed up. So in if we ignore whatever happened here, we can see that the whole assumption of price pushing up in supply and demand is what we wait for is once price forms a level and we see a retracement and a candle close above, we take buys to actually see a continuation to fill the range. And that's the same thing that we saw here. So when price formed the zone, it pushed up to this zone here. What happened after this is this zone was respected at this point, after which price retraced back down and gave us an entry and gave us the rejection of this level at this point. If we were looking for sales at this point and we missed them at this area, we will not be taking sales at this point because we have traffic as we go down. So the only place that we would be looking for sales in the event this zone held will have been at this level here. So that's the reason why I was not taking sales. So what ended up happening is with the rejection of this zone and this candle forming and engulfing at this point, this was a signal for me that this area will end up being broken. So I took my buys at this point, my sales just below the zone, and my take profit at this level here, which was the next zone. Now, if this zone ended up holding, we will see a drop towards this area. However, we will not see it until this level if this point is not respected, is not broken. And this is why I rarely take trades on the 5 minute, because as you can see, there is so much traffic, especially when you can see there is 1 zone, 2 zones, 3 zones, 4 zones, 5 zones. And then there's this kind of traffic as well. While these are areas of potential trades, the fact that there are so many zones all at once gives you less room to play with in terms of taking trades, because you can imagine if you got sell signal around here, the only place you will take profit at will be this level. Hence, the risk to reward would not be sufficient for you at this point. Same thing if you took sales with a break below this level, this is the area in which you're playing with in terms of range. So this is not enough range for you to actually maximize your trades. In the higher time frame, there's fewer traffic, hence why I take trades on 1 hour and 4 hour, sometimes on the daily. So that was the first trade. That was the gold buys. Those are the first gold buys. Now, gold has really been setting up really well, and we saw opportunity for more gold buys in the course of the week. Let me just check what day I took the buys. Just 1 minute. If you have any questions, by the way, just feel free to drop them in the dialog box and I'll check them out. Yeah, so these are the other gold buys that I took at this point. Yeah, so now the whole idea for this gold buys was we have seen price on the 4-hour leave footprints in terms of demand zones holding. So remember, we talked about the buys from breaking of this zone and retesting. And in the process of filling this range and eventual breaking of the range, we saw formation of demand zones here. Now, the final demand zone before we saw this major push was this one here. So this zone is what was the basis for giving us a buy signal. However, I did not take the buys at this point because speaking about the traffic, there was traffic on the 1 hour. All these wicks that you see here are traffic on the lower time frame. So the first anticipation that I was expecting was a break of this level, after which we will see a push up towards this area here, which was formed when we saw a break of this structure here. That was the initial call, but now gold being the way it is, and especially seeing this clean traffic to the left, the only way that price would give a sweet push up because of the clean traffic. So I wanted to maximize on that without really risking, and it was basically a gamble, not a gamble really, but an anticipatory trade, because you're taking buys at this point, anticipating that price will eventually push up and break this zone, such that even if price doesn't break this zone, you'll have caught your buys towards this range here, dropping down to the 1 hour now, where I took the entries from. Here we are. Coming to this point now, we can see that we have this structure, these zones that were formed here. This big drop, there was a drop, a fairly big drop. That was just, this was the last bullish candle before we saw this massive drop. And this was the candle that we have a massive drop again. So this is a key area for us in terms of a supply zone, this area here. Now, all I was anticipating for was once price breaks this zone, I'll wait for a retracement and a retest of a lower time frame zone at this point, after which I'll take buys with my stop loss below this, and then my first target would be seeing a break at this level. If I end up seeing a really big rejection in terms of candle closing here and then the next candle is bearish, I would have closed the trade at that point. But now what happens is I was waiting because of this clean traffic here. I knew that price coming up would not have a problem until we meet this level here, around here. And that was the trade. I took an impulse entry at this point, knowing, anticipating that price will eventually just push up, fill this range, push up. And the beauty of this trade is with such a big candle, and this is the portion where we talk about trade management. With such a push to the upside, we rarely get a week back down for us to actually continue. Because if we ended up seeing structure of this sort, just a slight break and then a formation of a wick on the upside at this point, and then we will be anticipating that the next candle will give us a retest to catch the people out who are selling at this level here because of this high, and then we eventually see a push up. That will be the optimum area to actually take a safer area to actually take the buys. So our buys will be at this point in time. Our buys will be at this level here. Just let me check the charts, just 1 minute. Okay, I'll answer those questions. Oh my. Yeah. I'll answer that question. Do you monitor trades or can you leave some running even as you sleep? I'll answer that in the after I finish explaining these trades. So this trade was able to give pips handsomely, and I was able to hit TP within my first target was actually hit in a span of, I don't know, was it 2 hours or so, 4 hours. Because I remember I slept having taken profit on some positions and let one run. So this target was at 300 pips. Then the final target, I was stopped out around this area here, but it was at around 4,000. So 300 and 400 pips. That was the buy trade now. So basically this was the trade here. Let's just call it that. Now the next one was gold sells. These gold sells and gold buys were taken yesterday, which was a really good trade. In the event, just give me 1 minute. Just give me 1 minute. Just 1 minute. Let me pay for this so that it doesn't bring any problems again. As always, you can drop your questions in the dialog box. I'll look at it. How do you map your monthly time frame? Why is it confusing? Well, for me, the monthly time frame is good in terms of just monitoring where price is coming from and where price is heading to. So the first thing that I'll always look at in terms of the monthly will be is has price rejected a level in the past? Where is price? This process is taking long now. Okay, it's paid now. It's paid. The guys who are asking, like Calvin the Great, is it possible for me to unmute you? Then you can ask your questions so that the rest can hear. I've unmuted you. Kelvin the Great. If not, we'll go to Kim. Kim, you can ask your question. Kim? Good. Now, let us continue. Let us continue. So I was talking about this gold, and actually this, not as a signal, but if we see a a break of this demand area here on gold, of which I'm anticipating. The next target would be around the 1900s level. So 1900s and eventually. And then if the weekly closes bearish, we might see a continuation to the downside to eventually fill this wick that is here. But that is just how I mapped out. So like, for example, the person who is asking how I map out to the monthly. Monthly is all about giving targets. I mean, setting points, important levels in price. Like, for example, for me on the monthly, this is around a level around this area will be key for me. Just to know that, okay, price is bound to react at this point. I just map out the major levels. You can see price reacted at this point. You can see price reacted at this point. Price will always react at demand and supply levels. That's the thing. All now you need to do is now understand, do I take, what will I be waiting for here? Because somebody else will be waiting for, will have their pendings placed at this point, anticipating that the kind of rejection they saw here, they possibly might see the same reaction. And even though they don't see a continued downward trend, they'll catch the rejection before continued upside or something of the sort. That's basically how, because you always have to ask yourself, where is price coming from and where is price going? That's the one question that I'm always, those are the two questions that I'm always asking myself. Where is price coming from and where is price going to? So yeah, that gold, I believe I've explained the gold cells. Oh, I was going to explain the gold cells. So the gold cells were taken around this area here. Around this area here. And the anticipation for these cells was a fill of this range and a break of structure, of which we ended up not seeing. So if I can zoom in here, we can see, let me remove this. Looking back, as I've just asked you guys, as I've just told you guys, where is price coming from and where is price going to? So at this point in time, price has broken this structure here. And we saw price breaking it. And eventually we saw price reacting at it. Now the optimum cells, as I've mentioned, will be around this area here. But since I missed my optimum entry at this point, because most of the time you might see some sort of reaction at this point, and as you start taking cells at this point, price eventually pushes up and catches you off. So the ideal setup will be look for structure, look for a structural break around this demand zone, because you can see when price dropped and started coming back up, we saw a demand level here. This one had a big wick, which is kind of not as good, but at the same time, you can just use the next candle wick and actually base your targets off this. So I took the cells. Once price gave me the confirmation that it has dropped at this point, I was just waiting for the reaction at this point, after which I'll take the cells. And then my anticipation was take profit at the first level. And in the event we see a break of structure at this point, then we'd be looking for the next target, which would be somewhere around here as the next target, as we see a push. And the push is lovely, giving us a good push. Now, so those are the cells that I took. Cells were basically at this point, around this area here. I'll post the exact trade on the gram. I don't think I posted these cells. Then these were the cells. Of course, my stop loss is not that up, but you get the whole idea. Those were the cells that I actually caught. Then now going into the last trade on gold, which was the gold buys, was as a result of rejection of this area. Always go into a trade knowing what two sides of what can happen. Know that in the event this zone is broken with price at this point, then we will see, if a zone is broken, then we'll see we'll more than likely see a continuation. In the event we don't see that, it means that this level is rejected. And so the only other way price can go is up. And that was the basis for the buys now. Once price eventually reacted with this kind of structure, all I did was go down to the lower time frame. I believe it was a 15-minute, the 30. It was a 15, if I'm not wrong. Yeah, here it was. Here it is, I mean. I took long positions at around this area here. It was 1940. Yeah, it was around 1940. With stop loss below that. And the reason for this sells was because, as you can see, price broke this level here. Let's say this level here. Now, this level held this time in which we were able to catch the sells. Eventually, we saw a break and a reaction at this point. And so this reaction is where we saw the breakout and the retest. However, you can see that we did not see a candle close above this zone here. And so the next place that we will be anticipating the trade will be at this demand zone, because we've already seen a confirmation of a bullish formation. So the retest might either happen at this point or at this point if we see rejection, that is. But what we saw in actual sense was reaction at this point. And so I took my buys after I saw this candle actually push up in that format, took my buys at 1940, and then target was actually to fill this range. This was the target. And eventually we saw a fill of the range. But what I want to mention here is, in terms of setting targets, you should not be overly confident on where your targets might be, because you can see if I had set my targets at this point, I'd end up closing out the trade on a break even or something of the sort. And that's where I talk about the bigger picture. If you look at the bigger picture on the 4-hour, you can see that, is it the 4-hour? No, the daily, sorry. The daily is showing us that we have a clean break of this structure. Let me even remove everything so that you guys can be able to see. The daily is showing us that we have this zone here. This zone here was broken, not that one, sorry. This zone here was broken with this fat candle. So the only thing with this now, once we get this retest and we fail to break above this level, the only other place price is going to is this level, and eventually the level around this wick here, of which is now what we're looking for. So even with me looking for my buys at this point, I'm not looking at the buys with the idea of continuing up to these levels. I'm taking the buys with the idea of looking for optimum sells to actually take my sells to actually fill this level here and eventually fill this level here. That is my target. That's why you can see that I was closing out the buys at precise targets, because I know that price will eventually just freaking drop to this point, then drop to this point. Then if we see a proper drop, we might even see price coming down to this level here. That is how I'm always having my eye out on gold. So that's beautiful. It's quite beautiful. I do have some cells from London. I do have some cells from London session from the break of this structure. And even post them just now. I'll post them in the course of once we're done with this. And that is that the same way we are talking about being in anticipation of levels breaking and all that stuff. This level was broken. And the first anticipation was, I was talking to you guys about the break of this. This was my anticipation. I was hoping for price to, since we've already seen a break of price at this point with this candle, all I was waiting for was a retest with stop loss just right above this area here, and my target at this lows here around 1900s. If we get to see 1900s, well and good. If we get to see 1850s in there, that 1860s, 1870s, that would also be good. But that is now that is my trade on gold. It's actually running 140 pips in profit right now, which is good. So do we have any, now let me go through the questions on, hopefully these ones are, how do you confirm a fake out? Then there's also, how do you determine where to place your stops? Do you have a predetermined number of pips stop loss? No, stop loss is basically as a result of how price is forming in actual sense. So if for example we have this zone here, stop loss is, the first point is to look for your entries. You look for the entries at the optimum price level. If you're trying to be safe, this area right above the zone will be the safest bet for you. However, sometimes you might want, if you place your stop that far away, you might end up not having the best of risk to reward. So if you come to the 30, I think it was a 30-minute. Yeah, you can see price is reacting. Price. This is where price broke this level here. As it was breaking, it formed this zone. Then we eventually saw the break. Then after seeing the break, we saw a retest. This retest, if I am taking my impulse entry at this point, then I'll still have my stop loss above this area, because this is the zone that I'd say if price continues to push up against me, it ends up respecting this zone, I'll still see a valid drop to the downside. So my stop loss will be at this point. However, if this zone was around this area here and I took my sales exactly at that point, I'd have a smaller stop loss. And now, depending on whether I'm risking 0.5% or 1% or the like, now that percentage is up to you now. But that is basically how you should map your stop loss. And the first thing you should set up is your stop loss, not your take profit. Because people often, I remember I also had this problem as I was starting. People are so fixed on the amount that they might get from the trade, and they forget about what they are risking. So first of all, you manage your risk, then you try and see what your return would be. Going into GBP JP1. Just before this, let me just share something. Just 1 minute. Just 1 minute. Mm-hmm. So I've updated the trade on Instagram. That's what I wanted to do. Yeah, so now let's go to GBP. I mean, GBP JPY. GBP JPY. GBP JPY, these are the cells that we took. I had spoken about this. These are the cells that we took on GBP JPY. Let me just clear everything. How do I clear things? Yeah. So we have 4-hour structure. Everything starts from the 4-hour in the daily, because this thing is basically repetition. What you can see, we have this zone here. Price rejected it, caught people out on the people who were selling out here, then eventually gave us the final push to this level here, to the overall, not the overall highs, but to this new highs. Now, once price tapped these highs, we saw a break to the downside, which signified a break of this demand area here. Now that is where price is coming from. In the event this zone is broken, where will price be going to? This demand zone here, characterized by this candle. If we see a break of this, with something of this sort, then we know that the next possible place that price is going to push down to is this level here. And as you can see, if this candle here breaks this, you'll see that the next target will be this area here. And the next target after that, if price continues dropping the weight, is actually dropping. So going into this trade, it was basically all an impulse entry. I was having a session at this time, but it was basically an impulse entry. Trade was called out. We saw this is what we're anticipating. Out of since I was not too keen on speaking on this trade at that point in time, I closed out the positions halfway through, because I felt as if I had not done the proper analysis of the pair. But eventually, after closing out on these positions with a small percentage, I think it was 0.5 of the account, I went back and looked at the pair again, and what I saw was I eventually caught the wick at this point with stop loss still above the zone, and the take profit was at this point, which was able to cover up for the 0.5% that I lost around this area with the entry here. If I had taken the trade, if I had held this trade, of which the person I took the trade with held the trade at this level, SL was not hit. The stop loss was still not hit, because the stop loss was above this zone and the take profit was still around this area, of which this was take profit level 1. And with price reacting the way it did, we will be seeing a rejection and a reaction, and we saw this reaction. But now with break of structure at this point, all that now we are waiting for is if price breaks this level and eventually breaks the daily structure, which is this structure here, we'd still be not looking for sells, but optimum sells for the downside will be once we see a break of this area here. And this is, even if I can hop onto Euro USD, you'll see that this is the same kind of thing that I've mapped out on the Euro dollar. Once you can see, I've even marked this. Once the break of this, entries can be found on the 1 hour. So all I'm waiting for is a break of this structure to confirm sells for me. And as you can see, we have clean traffic here. There's basically clean traffic until we get to this point. So this will be a good trade if we see a break of this structure. We have seen the respecting for about 2 weeks now, which is crazy, which is okay. But now what price will more than likely do is something of this sort. That's if we see a break. And once we see the break, wait for a zone to form, something like the way this zone is forming. It'll give you a break. It'll give you a break. Then as it breaks, maybe on the 4 hour, you'll end up, once you see a daily close below, all you just wait for is a 4 hour zone to form around this area here for you to actually take sales from. So yeah, that's my view. That was something I've seen is similar with what is happening on GBP JPY. Going back to GBP JPY, that was basically the trade. That was basically the trade on GBP JPY. However, we might see reaction to the upside here as well. We don't know. We've been seeing quite a bullish run, especially if you look at the weekly and the monthly. How also you can see this is the area that I'm talking to you guys about. It is a weekly demand area. So when people are selling, we'll be selling to buy, or if we see a break, we'll see continued downside. Yeah. Now the final one was USD card. I took this on Monday. Bam, bam, bam. If we look at the weekly, we can see price is coming from this point. If you look left, you'll see that this is a reaction of this price level here. So price is on a strong drop. Price is dropping crazy. So the only thing you can be looking for as long as an intraday would be sells. So you're only looking for points to sell. So at this point, don't sell low, just go wait for the retest, take. Then now you can see we have gotten to this demand area here, which was, if I'm being honest, was a crazy place to actually take sells. But as long as you've had your confirms on the 4 hour or strong confirms, then you can take the trade. So looking at what price was doing here, you can see I've not even removed the markings that I had from that day. You can see, let me expand this. You can see zone break. Once you see the break of a zone, the anticipation will be, and you can see zone break came to this level. Now we can, at this point, if we use this as the low, because this week was a bit too big, if we use the confluence of this week and this level here, we can see that we saw a break of this demand and this demand with this bearish candle. So the anticipation will be, once price comes to retest this level here and form some kind of confirms for sales, then we'd be taking sales at this point. Here's where I took my sales. So that is not the only thing that I was looking at in terms of this trade. If we go down to the 1 hour, I believe we'll be able to see some kind of price action that will tell us that we are going to go down. So this week started off with a gap. It's not showing on, I don't know why it's not showing on trading view, but basically Monday had a slight gap as we opened markets on Monday. And then what we saw is, you can see this demand areas here. These are the levels that I was talking to you guys about that were broken. Once we see price gave some sort of bullish reaction here, but then because of this level, we saw continued down. Once we broke this level, we saw continuation up. I missed this entry. This would have been my best entry. But then at the same time, even if it was my best entry, I'd be taking this trade with the anticipation that price would drop and break this new level here. But we saw break of this, Then we got this reaction here. Then after that, let me erase it so that you can see better. After this, we saw this structure form here. And eventually we saw this structure form here. So this structure is what I was using to base this whole sell scenario for myself. Price pushed away nicely and price came back strongly. Coming back strongly is not a signal for us to take buys at this point. It's signal for us to, if price is coming strong into the zone, then we know that price is going to react strongly from the zone again. So I took my impulse entries at this point. As always, trade is on Instagram for more information, but anticipation was to fill this range here. Once we fill this range, we saw a break of that structure. TP1 was already this at this point. Then my runner is now what you leave for the rest to see where price is actually going to go. I eventually ended up closing out around this point. This is not precise, but around this point. And you can see what price is doing is as price is dropping, price is forming demand zones, leaving traces of like what price is doing. So price is basically just forming supplies, catching buyers out. People who are trying to buy lows, they buy here, they bought here, they get stopped out. They bought here, get stopped out. Sellers who are selling at this point as well get stopped out. Sellers who get sells at this point because of the selling pressure get stopped out. Sellers stopped out. Buyers, because they're buying out of emotion, get stopped out. Everyone gets fleeced at this point. So if you don't know what you're doing in terms of marking up price, then you'll also be fleeced. You'll also be fleeced, and it will be really emotional for you. Those were the trades that I actually took, plus now the gold trade that I've just shared. Hopefully this has been helpful. Now I'll go to questions, although I've answered. Yeah, you can see Abed GJ could possibly continue down. Yeah, it is going down. That is for sure. That is for sure. When price is doing its thing, there's no way you can start. You can say otherwise, because you're seeing what is happening. Same thing on gold. Gold will continue down. That is a fact. That is a fact. So don't start buying lows on gold, because you'll get fleeced. You'll get fleeced. So yeah, are there any questions? Other questions? For anyone who's not, I'll just do a small promo. For anyone who's not signed up for the webinar that's coming next week, feel free to sign up. Just send me an email. Yeah, I mean, just send me your email address to my Instagram and I'll bill everything to you. So if there are no more questions, I guess I can just call it a day. Are there any more questions? Let's see. Yeah, no problem. Bro. Does anyone have a question?
Yeah, I have a question.
Yeah, ask.
So I was saying, as we can see, GJ has momentum going down. Mm-hmm. Is it safe like to look for resistance formed, then you take sales based on like, let's say, based on the M30 or the M15?
The first question you have to ask yourself is, what is being taken out? Supply zones or demand zones? Or what you're saying, demand, support or resistance, right? You need, if you're looking for sales on the M30, first of all, you need to get confirms on the higher time frame, because this is what is actually telling us what is happening. So in this case, what you're seeing is we are seeing a possible break of this structure. If we see a break of this structure, what you might see is something of this. Let me draw it here. Something of this form. You might see something of this sort. All you'll just have to wait for is a retracement back up. And it is going to be evident on the lower time frame. There is possibly a zone that is going to be formed around this area from guys who are buying this level here. Once they buy and they get stopped out, that level leaves a trace. So all you'll be waiting for is once price pushes up here in this format, you'll start to wait and see, are we seeing an exhaustion of this area? And is the confluence of this zone that has been formed here, is it holding or is it breaking? If it is holding, then that means that you can take yourselves to see a continuation, a feeling of the range first. And if the pressure is strong, you'll see this range being met. If we see a breaking of this level, then all we'll do is just wait in terms of hourly zones and 4 hours. Okay, personally for me, I wait for hourly most of the time because hourly will give a solid reaction. Like now, let me use this example. In the event we are seeing a break of this structure, of this demand area here, what happens is if this candle closes bullish, I guarantee you that there are people who are going to take buys, saying that they are aiming for this because there is clean traffic with their stop loss around this area. What will happen though, since we've seen a strong break, is we'll see the next candle fleecing all of them and doing something like this. This is good for us because we are taking, let's say that is the supply zone that is formed. We are waiting for price to leave its mark, and then we can be able to plot out zones. Like now, this will be our zone, this here, after which we shall be waiting for price to come here. And if price does its own thing here and ends up rejecting it, we'll wait now, since it has formed that so-called resistance at this point. We'll just wait for reaction at that resistance, after which now take sells. First target will be the range that was formed when price was dropping. Second range will be once price breaks this, then we know for a fact that the next level is the next area in which we have a zone. If that breaks out, then now we'll know when that time comes, because we can also end up seeing a solid reaction at this point that we'll see price push quite solidly to the upward direction. So that's how I've mapped out my ideas on GJ, and it's the same on GU, it's the same on gold, it's the same on basically everything. Once you see where price is coming from and where price is going to, your mind opens up on the possibilities that are there. Any other question? You haven't talked about fake outs. Fake outs is an interesting thing because it's basically what I'm talking about in terms of okay, let me like illustrate it here. Price breaks a level and leaves a trace over zone here. Price comes back down, breaks this level, then instead of giving us this confirmation, it ends up giving us this confirmation. So this is what somebody will call the fake out. Okay, because instead of price respecting the level, it actually broke. What you don't realize, what most of the people, the reason why people call it a fake out is because they don't know what happened. But to somebody who actually understands what happened, you see this area here, this is probably the zone that they drew it from. However, if you look keenly, you'll see that there was another zone at this point. The people, when most of the time when you have such kind of a scenario, price, and I think I've spoken this on gold because it did the same thing on gold yesterday. When you formation of such kind of sorry, let me just draw it once more. When you see such two kinds of zones forming at the same time, in this case, we have these two zones here. I'm usually quite cautious when taking these trades because what you might see is you might get fleeced 3 times, because if price does its thing, you might see something of this sort. Let me just illustrate it here so that it can be you can understand it better. Price has formed two zones at the same, almost around the same place. Then price does the next thing and drops. When it comes to this level and drops, what it does is it gives you a bullish confirm. So what do you do at the bullish confirm? You take your buys here, okay? So like, yeah, around, you take your buys, let me just write it here. You take your buys here, okay? Once you take your buys, what price does next is it fleeces you, takes you out. And then what you say is supply and demand doesn't work because you took your buys here with confirms and everything and you stop loss around this area. And what price did is it stopped you out immediately. So what do you do when price breaks this zone? You come and you say, okay, price is now breaking demand zone. So what do? I'll take sells. Where do you take your sells? You take your sells at this point. Anticipating that once the candle has given you this confirm here of a candle close, you take your sells. However, and then you start seeing like you are in profit. The actual sense is price is coming to get this premium price for buys. So what happens is once price taps this area, pushes up, you get fleeced at that point. So somebody who doesn't understand what they're seeing will call this whole scenario a fake out. Somebody who understands what they're doing or understands price levels in price where levels in the market where price might react will know that, okay, if I end up taking a buy at this point, I must be ready to take the stop loss a bit wider below this level, or I should be patient enough to wait for price to actually get to this level. If price gets to this low, then I'll be taking my buys. I can even end up taking impulse buys by the time price is getting to this level, before price actually takes you up to the overall high that was formed. I hope that makes sense. Kim, I think Kim is on with us. Yeah, I hope it makes sense. Hope it makes sense. Any other question? That's basically my view about fake outs. It happens all the time. It's not only in this scenario, but it's in most scenarios.
Bossman. Can you go to EN a little quick?
Euro NZD.
Yes.
Let's see. Just give me 1 minute. Clear the drawings, okay? What you
look at the hourly.
Yeah, this is the hourly.
Yes, you can. So one can see if this is like some sort of demand zone. Let me through it.
This one here.
Yes, and this one also.
Yeah.
So in terms of, let's say your approach, you want to buy around this area. Yes, that one.
And this one.
So
where do you want to buy from?
This one. So what are you like going to look at, like to take your buys? What are you going to look at?
Okay, I get what you're saying. First of all, I believe I talked about this in the first session that we ever had on Instagram. No, the second one. And you were also there. I remember you were there. You remember when you were talking about?
Yes.
There's somebody who's, could you mute yourself a bit so that yeah. So we were talking about ranges and how you should not, how when a range is forming, a range always gives you something of this sort. Just so I'm saying when a range is forming, it's these demand zones here are points for you to actually take buys from. So like something like that. But now when the range has finished forming from the overall swing lows and to the top swing highs, these same demand zones that you're looking for buys are areas that now you should be looking for sells. Why do I say that? Because that when you are, when you, let's say you're buying at this point and you're selling at this, the people who are all, everybody who was buying at this point have eventually taken all their profit. These are profit areas that they're taking. This is profit that they're taking, okay? Once all the positions of the people who are running the market, the algos that are doing their thing on the markets, once it gets to this point, what happens is there are sales that are in order at this point. And so the idea of you taking buys at this level will be going against what the market guys are actually doing. Because for them, they're now looking for opportunities to actually profit from sales. So once at this point you buy, you might end up seeing that. It might give a confirm and then it drops to the next level. Then at this point in time, you take a buy again, it breaks through the same way we've seen a break of this and what is happening here. Then eventually when it finishes forming its whole range again, the buys will now be in effect. So coming back to EN on the hourly, this was the range that was forming, okay? This was the range that was forming. This range was sells that were taking place. Hence why you can see price started with a small demand, a supply zone, price came back, gave a continuation. Price came back to this, gave us a continuation. Then formed another zone, and even if we did not see a touch of that level, we saw a continued drop to this point. Then we saw a break of that level and a retest. Then we see the final push on the range. Now, once this range was completed, these very same ranges that you're looking for sells are now areas that you're looking for buys. And so what happens is, looking now at these levels here, you can see that this level, while it seems as if it was reacting for people to sell, this would be a perfect sell scenario for somebody who is waiting for sales. They'd be saying this is a confirmation of price reacting at this level, and we've even seen a break of demand. So we have clean traffic. So where is price going next? Price is going to come to fill this range. But what you don't understand is the range was finished, and now what you're doing is we are forming another range in a form of expansion with this to this new highs here. So this will fleece you out, and then you end up taking the loss, and then we get to this point in time. Gives us a bearish candle close. People who are selling again, sell. What happens is they get stopped out again because we are in a new phase of new buys to fill and form a new range here. Once this new range is complete, and we are sure that this range is complete with the bullish pressure ending, then we see a shift in direction now, which means that these same levels that we were possibly looking for buys, even if we did not find the buys at this point, we probably saw the buys a bit. These same levels that you were looking for buys are the levels that we'll be looking for sells. That's why you can see when you look at this, somebody who had placed pendings at this point was automatically fleeced within minutes, because they'd be looking for buys when a range has already been formed. At this point, the same thing. Somebody who is looking for buys at this point, I wouldn't check on you taking buys because you will get fleeced by price. And once price gives you confirm that it has even taken out these lows, you might see price coming back to this level. Eventually, we might see this levels here. And if we see a break of this, then this will not be a level of selling. This will be a level of buying. So that the range, this is how market moves. Expands before we actually see now where price is actually heading. So if you're looking for buys at this point, it's sad for you. If you're looking for sells at this point, you're equally lost. These points here. You should be looking for, when price is dropping, you should be looking for areas to actually buy, but optimum price levels to actually buy. When price is pushing up, you should be looking for optimum areas to sell. Yeah.
Okay, understand.
You get what I'm saying? So when the range is forming,
Yes, I understand.
be cautious. But not to say that price cannot react at this point. We might still see this giving a bullish signal, and then we see an overall drop. But this would be a gamble, if I may say so. And it's the same thing that is happening on EU. It's the same thing that is happening on all these pairs. Okay? Just be
Yes.
aware. Yeah, just be aware. What do you look for when looking for setups? I believe I've answered that question as I was going through the trades that I took. Yeah. So we saw the break of this structure. If we, depending on how you're mapping out, if we might possibly see a reaction to the downside. We have about a few minutes to the 4-hour closing, which is really strong. If it gets to close below this, we might see a continuation downside, but this is the first target. So yeah. Peace. I hope everyone has gained something from this. I'm calling it a day in this Zoom session. As always, feel free to DM me and see what I can do. So cheers.